Good afternoon, traders, and welcome to another edition of Market Analysis with AndraAI. And we're having a very bearish day today, and as I've been posting to Twitter with the screenshots, we're being affected in the indices probably mostly by the collapse of the SVB Bank of California, which is the Silicon Valley Bank. And it's one of the 20 biggest banks in the country, and it's already been closed by the authorities, and we have to see whether or not we're going to see a federal bailout of that. We don't know yet, and arguments obviously on both sides having to do with that, and a lot of people are saying that it reminds them of the Lehman moment in 2008 that was the beginning of our real disaster that happened in 2008. But thinking back in history, it might also be something more akin to the situation with the savings and loan banks that had all kinds of problems with bad loans in the 1990-1991 time frame. That caused a rather major recession. Okay, so one way or another, it's not very good, and the market is very, very nervous. But on top of that news, there's also news that is roiling the currency markets. And the news that's roiling the currency markets has to do with something that came out on Bloomberg this morning, that China had established diplomatic relationships with Saudi Arabia, and they were going to build embassies in each other's countries, and that also China was brokering a deal between Saudi Arabia and Iran, who have historically been enemies, with the idea of China being able to buy oil in yuan from the pair. And that is basically seen as bearish for the dollar, and because of that the euro started to zoom. And I'm just going to switch over to my euro chart and model so you can see, because we have a model on the euro as well, and the euro has zoomed up. We just got a new forecast, and that's looking for a little bit more upside, possibly Sunday night. Right now the euro is very, very quiet as it's pulled back a little bit from its high. Now I should point out that the euro has now been rolled to the June contract. The ES will roll to the June contract as of Sunday night. And we have expiration in the ES next Friday, so just be aware that we're in roll week. Okay, so as Andra has been making these bearish forecasts, have there been opportunities to take advantage of them? Well, if we look at our analysis tool, which is always a good thing to do, I've been analyzing shorts ever since we tested that break point in the 3880 area a little earlier, which was, if you understood breakpoints, an opportunity to either add to or take an originating short. And you can see at 62 we still had a 64% edge in a short. And if we actually trail the market going down, it's one of the interesting things you can do. You can keep reevaluating trades as the market goes down. Right now we're at 52. We'll see if Andra thinks there's still an edge if we were to initiate a short at 52. Actually, before I do this, let me blow up my screen a little bit so that you can actually see a little better what I'm doing. Okay. So I just went down to 52.5. We'll try a best trade again. Let's see if it still has an edge. Yep, still has an edge. And that's one of the things that I like to play with, is as a market is going in a direction, to check and see at what price the edge sort of disappears. Even at 48, if we do a best trade, still showing an edge on a short. So there could be quite a bit of oomph to the downside still to come. So don't, if you're short, I would hold the trade into the close. You've got to be brave to hold it into Sunday night, but you know, like I said, that's a personal choice of yours. But we don't know what will happen over this weekend in terms of federal bailouts and the like that could turn things around on Sunday night. So anything's possible, so just be careful. Okay, and like I said, this is being evaluated with our RIM model. One of the things that I want to point out here is that even though as we go down, edges still remain, you can see with a trailing sort of like 16-point stop, which is what I'm showing here, or a 12-point stop, the stop out probabilities are rather high. right now for a trade that was evaluated at 48, which we're not quite to yet. The stop out probability would be almost 32%. Okay, so the risk is very, very high. The volatility is very, very high, but the opportunity for more downside is certainly still there. And like I said, so that means that you should be basically using bigger stops and less leverage. Okay, and if you don't know how to do that, I will be covering risk control and the proper way to use leverage at some point in an educational video. Okay, so let's go back to our other screens, and let me see. I think what I'm going to do is I'm going to show you how this all plays out on the weekly chart. So just give me a sec. I'm going to okay, I'm back, and one of the things I wanted to point out to you, this is a weekly chart, and you can see the weekly chart is quite bearish, and it's heading down towards some critical levels. We've got a lot of critical levels in the in the high 3700s, and if you remember what I just showed you on the AndraAI chart, there is the possibility of us testing 3800 this afternoon, and certainly if not this afternoon, on Sunday night, and maybe even breaking it by a little bit and getting down to test that 3790 area. But this opens up the possibility for a very interesting week next week. But just understand that for all intents and purposes, there are only two big things that could be going on now in the bigger picture. One is that we're forming some sort of a sideways structure, maybe between 3730 and basically 4040 or 4050. And that's a possibility that we're going to rotate back and forth in this zone. But the other possibility is we're coming back down to test the low from October, and that low is in the 3500s. Okay, so just be aware of that. Okay, guys, so that's what I've got for you. One of the things I also want to point out for you is that when we're getting big moves in currencies like we were getting this morning, everybody is a currency trader. And the reason I say that is because everybody all over the world that trades the ES, and believe me, the ES is traded all over the world, is invested in the ES in dollars. But that means that they're concurrently hanging on to a currency trade along with their index trade. And when the currency trade that they're having is going strongly against them, as well as the indice going strongly against them, it's sort of a double whammy. But one thing's for sure is that no matter where you are in the world, you're seeing something different than what we're seeing in the United States because of the big currency moves. And particularly for Europeans that are holding the euro, the market would appear to be down much more from their standpoint than it is to us, even though we're seeing some rather big moves down. And that makes trading more difficult, and also means that you have to pay attention. And it's one of the reasons that we did the euro for our second model. And we'll be doing more models in the future. Anyway, I hope this is helpful, and I know a lot of you are going to watch this over the weekend, along with keeping an eye on the news that comes out having to do with a potential banking crisis that's brewing. Okay, so I will see everybody later, and good trading, everyone.